staff, management, or ownership of this station. It's time to get on the right path. Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome back. I guess welcome back to me. It's the start of show. I don't know why I said welcome back. Jason Bible, Right Path Real Estate. What a great weekend. I went up to Dallas early. I was speaking at the Quest Expo, which I'm going to get into the Quest Expo, but I'm going to go ahead and give you the Cliff Notes. Best real estate conference I've ever been to. And I go to a lot of these things. The best real estate investing. It wasn't just real estate. They had other stuff that was going on there too. But it was all investing with your IRA and all that stuff. Best investing conference I've ever been to. It was absolutely phenomenal. And part of it a big part of it had to do with the networking. Holy cow. It was like the who's who across the country in real estate. I mean, it was a pretty high bar there. And we had an absolute blast. I got to sit on one panel, and I got to do one of the lunchtime presentations. Tom was on a panel yesterday. Just a fantastic event. First time Quest put it on, and I'll tell you what, it looked like they'd been putting on an event like that for 50 years. I mean, it was fantastic. The Quest team did an excellent job. The speakers that I sat in on were absolutely fantastic. The guys on the panel that I was on were excellent. So it was just an all-around great event. So I got up there early Thursday. A buddy of mine, Scott's got a mastermind group that I snuck into, and I got some updates about what's going on in the non-performing note space. And what's fascinating is the note side of this business, the distressed debt. What does that mean? It means that the banks typically will see what's happening in a real estate market before we do as real estate investors that are actually buying the assets. In other words, they will know before us when a market starts to slow down. Now, two questions. Jason, how do they do that? And how do they track that? There's two ways that they typically track these things. One of them is new mortgages. Mortgage applications. You'll see that from time to time. If you're reading real estate news, hey, how many applications for new mortgages? That could be refinance or new purchases. How many of those are they getting in? Are they receiving from consumers in a certain market? That will give them an idea of how active or robust a market is. I mean, if all of a sudden you see mortgage applications take a nosedive, that means less houses get bought because most people buy houses with a mortgage. The second way they track that, if you are a mortgage servicing company, is one real simple question. Are people making their mortgage payments? And that's tracked with a metric known as the default rate, meaning how many people are not paying their mortgage. If you're not paying your mortgage, then obviously there's some problem in that market. So I like to chat with the note investors from time to time to figure out what's going on in the world of single-family real estate. Now, some of this you have to take with a grain of salt. And let me start by saying this. There's a big difference between defaulting on $1 million house note in Texas and a $200,000 house. Like, those are completely different markets. When you're looking at the median home price, that's really, when you really get down to what we do here at Right Path, we teach people how to invest in real estate in and around the median home price. I'm not teaching people how to flip $3 million homes. That's just not in Texas. That's a weird market to be in. And truthfully, I wouldn't even do it in any other state. Just being completely transparent. I'm not a California investor. I'm not a Florida, and by Florida I mean Miami-Dade. I'm not a Miami-Dade, Florida investor. I'm not a New York. I'm not a Boston. I'm not a Chicago investor. I don't like those high-end markets. They're too volatile. So when Tom and I are on the radio and we're talking about real estate investing, we're really talking about in and around the median home price in your market. In Houston, Texas, I don't know what it's, 225, 240,000 bucks. Dallas, 250, 260. San Antonio, probably 225, 210. You know, Oklahoma City, probably, I don't know, 130. Little Rock, Arkansas, 145,000. I mean, that's really the type of investing we're interested in. The question is why? You have a higher likelihood that you're going to sell or rent that house when you're in and around the median home price. The median home price is where all the action is in your market. Really, it's the point at which all of those markets come together, is right around the middle. So when we talk about national numbers, when you look at Case-Shiller, which I always find funny, when someone quotes me the Case-Shiller of the day, the Case-Shiller index, and Jason, this is happening and that's happening with the Case-Shiller, I'm like, you know Houston's not included in the Case-Shiller, right? It's a 20-city composite, of which Dallas is the only one in Texas that's in that. So it's kind of worthless for us down here, but that's a discussion for another day. So you've got to be careful when you share nationwide statistics, because not only do we have the variability of one market to another, we've also got a lot of variability inside our market, especially here in Houston. I was explaining to a lot of our out-of-state colleagues this weekend how big Houston is. They're like, oh, yeah, it's a big city. I'm like, no, it's not, oh, yeah, it's a big city. Let me tell you how big this market is. It's 100 miles by 100 miles. It's 10,000 square miles. And they go, okay, yeah, that's big. And I'm like, no, hold on, let's back up here. Where are you? And then it'll be some little market in Connecticut. And I'll say, great. You know, your entire state fits inside my market. And they go, oh. And I'll say, yeah, my market is bigger than a lot of states. The size, the geography of Houston, Texas. If you chat with the guys at Fast Track, they don't travel all over the city of Houston. Well, what I consider the major Houston metro. That's Brookshire to Beaumont, and it's Galveston to north of Conroe. That's what I consider Houston. Now, technically, that's outside the Houston MSA, but it's not that far out. If you guys are zipping back and forth to Dallas right now, y'all see it. How much construction is there on 45? I almost can't tell where Houston stops all the way to Huntsville. Pretty soon, and by pretty soon I mean in the next 20 years, you won't be able to tell where Houston stops and Dallas starts. And those y'all zipping up and down 35, it'll be the same way. You'll go through San Antonio, Austin, Dallas, and you're like, well, I thought we were still in San Antonio for 4 hours. That will happen. It's just a matter of time. So when people start giving out national real estate statistics, just be very careful when you hear the numbers. So I'll give you a good example. And I'm trying to find the stat. I should have texted Scott. But Texas right now is number 2 in the country for mortgage defaults, which in part makes sense. We're one of the largest states. We're a big state. Second to Florida. And Florida has just been a bloodbath since '08. Part of that has to do with Hurricane Harvey. We are just now starting to see that. I was chatting with some of my banking contacts before I went to Dallas. I had a conference call on Tuesday or Wednesday. And I said, hey, what are you seeing? They said, hey, we're starting to see some tapes, meaning lists of non-performing notes, meaning people who've stopped paying in Houston as a result of Hurricane Harvey, which is fascinating. If you guys go all the way back to around this time last year, Hurricane Harvey blew through here about this time last year, you will hear me on the radio say, there's a lot of these houses that got flooded. A lot of them don't have flood insurance. They're going to get a reprieve from their mortgage for 6 to 12 months, and then they will go into foreclosure. That's one scenario. Here's the second scenario. These houses had flood insurance. They got a check. The rehabber or contractor has walked off the job and they have a half-finished house and no money to fix it. That is a common scenario as well. So when people think that, oh, we're through this hurricane thing, it is just getting started. There are a handful of neighborhoods I'm looking at around Houston that, surprisingly enough, are the ones that were impacted by Hurricane Harvey, and those houses are sitting. Their markets are... I'll give you a great example. Go on to HAR right now, MLS, and search for all houses that have been sitting on the market, have a cumulative days on market above 200 days. Guarantee you a lot of those are Hurricane Harvey neighborhoods. We get back from break. I'm going to talk more about this. Jason Bible, Right Path Real Estate.
Mike's off.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your
Morning,
properties
James.
on a single policy will help save
Man,
time and
something's
money.
goofed up here on
Benchmark
the
has been in
Facebook
business
feed.
for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353 or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property?
1 minute.
Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, Jay, you ready?
Yeah.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Talk about the Hurricane Harvey effect. What I learned at the Quest Expo. It was absolutely fantastic. I'm going to get into some owner finance stuff because I got somebody shared with some things with me this weekend that really opened my eyes to something that I always knew was a problem. This is a classic example of there are people that teach real estate and there's people that do real estate, and typically those things are completely different. This was a classic version of somebody who does this at a high level was like, no, you do this, this, and this. And I'm like, oh, that makes sense. So I'll get into that here in a minute. So if you take a look, you can already see the impacts of Hurricane Harvey in Houston. Those are the folks that have listed houses that are sitting on the market for the last 200 days. And we know that people that did not have flood insurance or that cannot get their rehab or get their rehab done, contractor walked off, homeowner took the money and took off. I mean, whatever the story is, those houses are going into default. It's really just a matter of time. It's going to impact very small sections of the city, but you are going to see foreclosures jump up. And it makes sense. I mean, we predicted this a year ago. Unfortunately for those homeowners, and fortunately for real estate investors, this creates an opportunity. And I hate to even say this because it sounds like we're profiting off the peril of others, but the reality is that who's going to rebuild this city? And I've said that for a year now. Some homeowners will rebuild. A lot of them are going to put their arms up and say, forget it, and walk out the front door. Who else is going to do this? The city's not going to fix these houses. FEMA's not going to fix these houses. State's not going to do. Who's going to fix this house? It's going to be real estate investors. That's it. It's the only people who are going to do it. There's no bailout for the city of Houston. Donald Trump is not going to come down here with a tool belt and help rebuild houses. There is no white knight from the government that's going to come down here and fix it. Save the day. The cowboy with the big white hat. That's not going to happen. It's going to be real estate investors that do it. The only way the city gets rebuilt. Homeowners do their part, but let's be honest. If they haven't done it already in the last 12 months, I'm not sure if they'll get it done in the preceding 12. So it'll be up to us to go buy these houses. Buy them on MLS, buy them from wholesalers, buy them from real estate agents. You can buy non-performing notes if you know how to do that. And fix these houses up. Put them back on the market for rent or for sale. You can already see in certain submarkets where homeowners are just not buying the Hurricane Harvey houses. We were talking about it this weekend. I had my keynote during lunch on Saturday. And It literally was a who's who of real estate investing across the country in that room. And I walked in there and I said, here's the deal, guys, in a not so subtle way. There's real estate as an investment and real estate as a business. And let me teach you guys the difference. And there were a lot of people who had never heard that before. There is a big difference. You're trying to do both. It doesn't work out real well. Trying to use strategies for both, it's just hard to build a business or it's hard to be an investor. But one of the things we talked about afterwards is where do you think we're at in the market cycle? Most markets last about 18 years in big market cycles, or about 18 years. We're about 10 years into this one, probably got another 8. My prediction is next big downturn's 2024, 2026, somewhere around there. But locally, what do you think is going to happen next? And we got a couple of guys around the table and had a conversation. Actually, it was at the hotel bar. We had a bunch of people from Texas there, obviously, since we were in Dallas. It was kind of funny. At one point, I went up to get another beverage from the bar because I was ordering the fancy beers. And I was chatting with another guy just standing there waiting in line. And he said, who are those guys that you're hanging out with in the corner? And I said, that table right there, those guys that are sitting there invest about 1,000 to 1,500 houses a year. It was small tables, like 5 or 6 of us sitting there. He said, you're kidding. I said, no. And I said, that table right there, we probably look at 10 to 15,000 deals a year. So it's a pretty good group. So he immediately sat down and started listening. He was like, what is going on here? So one of the things we were comparing notes about is where do you think we are in the market cycle? And there's all this discussion. What about this? What about that? Blah, blah, blah. And I said, you know what, guys? It doesn't really matter. And they said, what do you mean? I said, I was having a conversation with a buddy of mine. He had bought a ton of stuff in 2006 and going into 2007, which typically, depending on, most economists agree that was the peak of the market, 06, 07. Now, the way he bought these things, he didn't have enough cash to cover him through the crash. And he didn't have enough equity in these things to ride it out. However, I ran into him at the same event. And I said, hey, I was talking to a buddy of mine, Bob, and we were chatting about, he was doing a deal. We're talking about IRA stuff. I may talk about that later in the show. But I said, hey, man, if you could have held on to those houses when you bought at the peak, how much more would you be worth today? And he said, I actually look it up every year just to remind myself. And he said, if I bought those houses at the peak, when I bought those houses at the peak, if I was able to survive the 18 to 24 months of the downturn, he said, I would be up $22 million. I'm going to say that again so everybody gets it. This guy bought a bunch of his portfolio at the peak, 06, 07. If he was able to carry those through the bad times, he'd be up $22 million. That doesn't include cash flow and everything else. That's just a net worth. So whenever I get into these market discussions, everybody tries to get smart by half. They say, we got to time the market. We got to time the market. Timing the market is the worst strategy for any investment. Timing the market is, you can't do it. Well, maybe you think you can. So the whole point here is I'm going to get into discussion about market. What do we think is going on in the market? But then I'll tell you this. If you've got enough equity and you got a little bit of cash, it doesn't really matter. The real estate investors that were able to survive 06 and 07 built massive portfolios coming out of that crash. So let's not get into the game of, are we at the top? Are we at the bottom? I don't know. Here's what I'll tell you. This is where my data starts getting real weird. I look at prices. I look at what's happening on the market. And the market is telling me we might be in the third quarter of this football game, going into the third quarter. We've come out of the half, going into the third quarter. And there's a couple of things that are telling me this. The non-prime mortgage lenders, that's what they're calling it. Instead of subprime, they're calling them non-prime mortgage lenders, are popping up everywhere. In fact, I can't remember who was telling me this weekend, but they said, hey, at my office alone, and he's in a really nice business park, he said, there's like a half a dozen new companies, new mortgage companies that popped up overnight in the last 12 months. And they're all for non-prime or subprime. If you guys go back and listen to what Tom and I have said for the last 5 years, some of the stuff's on YouTube, some of it's on Facebook, some of it's on other people's pages. One of the things Tom and I said, because people say this and they don't understand, and I hear from nationwide economists and they get it wrong. As interest rates rise, people will buy less houses. BS.
2 minutes.
As interest rates rise, lenders begin to step into that space and are willing to take more risk. That's what really happens. So as interest rates rise, and they've risen in the last 12 months, non-prime or subprime lenders have entered the market. Why? Because there's enough meat on that interest rate bone, if you will, to sell the paper in the secondary market, meaning for other investors to get interested in mortgage notes again. That is absolutely what's happening. So what happens as interest rates rise and people who previously could not get a loan for a house can now get a loan for a house?
1 minute.
What happens to your real estate market? There are more buyers in the market. Now, are these buyers for $1 million homes? No. These are buyers, first-time home buyers, maybe second-time home buyers, in and around the median home price. And I'm going to tell you this. If you think real estate's expensive now, just wait. I've said that for 3 years now. If you think real estate's expensive now, just wait. This appreciation train is going to continue. The mortgage brokers have figured it out. There's going to be more of these guys and gals, more of these families that can afford houses because the way changes are occurring in the lending market. So get back to the break. We're going to talk more about that. It's Jason Bible, Right Path Real Estate.
Mic's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly,
1 minute.
what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. So we got a lot of stuff going on in the marketplace. And I hope the segment before this, I preface this discussion we're going to have in this segment. Market timing really doesn't matter. What matters is you buy those houses. I say this, and I'm going to say it, and it's going to go over most people's heads. But we're on a business radio station. It might make sense. I said it this weekend, and when I said it to a couple of guys, they go, I have never heard of that before, but it makes perfect sense. When you buy a house with a 30-year mortgage, what you're really buying as an investor is a 30-year call option on a single-family piece of real estate that pays you in cash every month. I'm going to say that again. When you buy a house with a 30-year fixed-rate mortgage, it's like buying a house with it's like buying real estate with a 30-year call option. That cash flows. So for you finance guys and gals out there, you probably have never heard that before, but immediately go, oh, that makes perfect sense. I'm locking in. I was having a conversation with a finance guy, a couple of guys, Saturday night at the casino night. You're locking in a price, the terms for the financing, meaning length of time, and the interest rate. And you're also well, I shouldn't say you're really locking in, but you're also getting a lease out of that too. At any time in the next 30 years, if you no longer want this investment, you sell it. Now, it's kind of funny. We were talking about this yesterday at the house. My wife and my boys went out with a buddy of mine and I would say his girlfriend. It's really his wife. They've been together like 30 years. So they went out fishing on the Galveston Pier. And so this friend of ours asked Sarah, hey, we're still like really confused. What is it that Jason does? Like he buys real estate, but you know, it's just there's like equity and all that. She said, well, basically we're buying houses that even if it doesn't work out today, in other words, even if we don't want them today, we can sell them and still make money on them. And she goes, oh, that makes sense. So she goes, yeah, we're buying a rental property and we're going to fix it up And if we decide we don't like it, we just turn around and sell it. Like today. We've got equity in it today. But if we decide to keep it, it brings in cash flow for monthly rent, and the house continues to appreciate. And we get some tax stuff and all that. And she goes, oh, that makes perfect sense. Now I get it. So for you high finance people out there, it's like a 30-year call option. That's really what you're doing with a 30-year mortgage. At any time over the next 30 years, I can cash in my chips and walk away. So when I start getting into discussions about market, people start taking these really lengthy notes about trying to predict the market and you can't. But I can tell you where we're at in the market cycle, especially after comparing notes with everybody this last weekend at the Quest Expo. Hey guys, where do you think we're at? I think we're in the third quarter. A lot of guys like to compare it to baseball since there's 9 innings. I think we might be deep in the 7th, a little bit further than halfway. And I said, well, what I'm hearing is there's a lot of these subprime, non-prime mortgage brokers that have popped up over the last year. And they said, yep, sounds about right. As interest rates rise, these guys start getting interested again. Now, let me explain what that looks like. A lot of these mortgage brokers, back before 2007, built these big companies, sold a lot of notes, made a lot of money. Then their companies were bankrupted. They shut them down. They had these millions and millions and hundreds of millions in some cases of dollars that they've done nothing with for the last 10 years. And these same, it's questionable ethics-wise, but now they realize we're going to be back at this again. We're going to be selling houses to people who can't afford them. That's essentially what it means. Non-prime, subprime, they're people that don't qualify for traditional mortgages. 5-1 and 7-1 ARMs have been around for 5, 7, 8, 10 years. I mean, even right after the crash, you were able to get ARMs. So this stuff is all coming back. It's just part of the cycle. It's just part of the cycle. And people tell me, well, Jason, what, we're going to bail out the banks and all that over again? I said, no, it's even worse this time because a lot of these banks are even bigger. Scott talked about this from stage on Saturday afternoon. Before the crash, these banks were leveraged 25-1. Now, last rumor I heard, it was 50-1. They are legitimately now way too big to fail. Way too big to fail. There was too big to fail. Now there's the J Bible definition, way too big to fail. Now, don't get scared. That just makes a buying opportunity for us. So what's it mean? Over the next 5, 7, 8 years, keep building your real estate portfolio. Prices on real estate are going to continue to climb. That's absolutely what's going to happen. And when you start looking at the amount of equity you've got in these rental properties, sell one, pay another one off. This is the strategy we've been talking about for over a year in our club membership level. And we've been talking a lot about it in our passive investor network. Go into a neighborhood, get a great deal on one house, and literally buy the house next door and put 20% down. At 7% appreciation, it will double in almost 10 years. Somewhere around year 5 or 7, assuming we haven't gone to war with Russia and North Korea and all that other nonsense, assuming there's no imminent war out there, the economy should truck along like it has. 7% appreciation. Somewhere between year 5 and year 7, you'll sell one house to pay off the other. I'm not one of these guys that says you need to keep leveraging in real estate. I think that's a long term. I don't think that's a strategy that really works well. Unless you got a lot of cash. I don't know. I'm not just. Here's the reality, folks. Y'all don't need 100 houses. Most of you guys listen to this radio show. You don't need 100 free and clear rental properties. If you want to do, that's fine. But most people are looking for $10,000, $15,000, $20,000 a month in income. And in order to, at least for me, I know to reduce the risk of a downturn, I just unleverage myself. In other words, I take debt out of my business. That's where the real risk is. Real risk is in leverage, because leverage works both ways. Right now is a great time to use leverage as these things are appreciating. And then in 5 to 7 years, you look around and go, wow, that house we bought that was worth $150 is now worth $250. And we're all in mortgage. Let's say the rest of my mortgage is only $110,000. I could sell one of these houses and pay off the other one. You buy 20 houses over the next 2 years. And then the next 5, sell 10 and pay the other 10 off. And now you've got 10 houses that should be making you net $1,000 a month each. You're making $10,000 a month with no debt. And let's say lease rates fall by 25%. So maybe your profit goes down to $750 a month instead of $1,000. You're still bringing in $7,500 a month in net profit for 10 properties. And here's the other thing I can tell you. If that happens, I shouldn't say if, when that happens, you're going to go back in and buy back these same houses for a lot less than what you bought them for. Now, I will tell you this. Real estate peaks and valleys are bigger than the previous peaks and valleys. Let me give you an example of that. If you were buying houses in A-Leaf for $25,000 after 2008, you're probably not going to be buying those same houses for $25,000 in 2024, 2026, 2028, whenever that is. Instead, you're probably going to be buying them for $50,000. Of course, a few years prior, those houses were probably almost $200,000. So the troughs and valleys are not going to be the same, but they'll be the same relative to their previous peak. That makes sense. There will come a point in Houston, Texas, just like that's happened in the past, where we will be literally buying real estate for dimes on the dollars. That is absolutely going to happen. Multifamily investors, they will come back at some point in Houston, Texas. Now, maybe we won't be buying apartments for $7,000 a door. Maybe in this next cycle, it'll be $20,000 a door.
1 minute.
I talked to a commercial guy up in, let's just say, the Northeast. And he was telling me they're building for almost $300K a door. That doesn't include land. So when I start comparing notes with what's going on in the market, I think we're about in the third quarter. I think we're getting into the third quarter here. So that tells me we still got another 5 to 8 years left, provided nothing crazy happens in the market. But this is the time to get in. I get back from the break, we'll talk more about the markets. Jason Bible, Right Path Real Estate.
Mike's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a
1
question
minute.
of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
This is Business 1110.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I'll give you the key takeaway from the Quest Expo. I didn't even get into the owner finance stuff. Maybe I'll talk a little about that Friday. I heard, and I met somebody just randomly at the VIP coffee bar that Scott introduced. Hey, do you guys know each other? No, we don't. We just talked for 10, 15 minutes before I got on my panel. And then she gave a 7 or 8 minute presentation on owner financing that is literally the best presentation I have ever seen in owner financing. Most owner finance, whenever I talk to these guys who do owner finance, they're kind of cobbling together a business and they kind of cobble these notes together. It's, be quite honest, it's always been kind of a, I don't want to say a dirty business, but it's always been, it's just never made a lot of sense from a, in other words, how do you sell the paper? That's really what I'm always worried about. Anyway, so she gave this presentation in 8 minutes that I saw that I was like, oh, this is phenomenal. So I might talk about that later this week. So the expo was fantastic. I would imagine, I don't know this for a fact, but I would imagine Quest is going to do this again. It was absolutely fantastic. I highly recommend you go. But let me give you guys the synopsis, the summary of the entire weekend. Buy more real estate. Buy more real estate. Every single investor that I talked to that had been investing prior to 2006 and 2007, one of the things I would ask them is they would talk about, yeah, I kind of lost my shorts in 08 and 09, but, we came out of it smelling like roses. And I said, look, now, if you could go back to 06 and 07 not knowing what was going to happen in 08 and 09, would you buy more houses? And every single one of them said absolutely. Even knowing that the crash was coming, they said, I wish I bought more stuff in 06 and 07. Here is the one theme that runs through the investor community. It's regret. Every single one of them I talked to regrets not buying real estate. Go talk to any real estate investor. Come out to, we've got a free event tomorrow. Starts at 6:30. You can come on by. We'll share with you how we do real estate. We'll have another free event here on Thursday at lunchtime, noon. Go to any of our events and ask any real estate investor there, hey, do you wish you bought more houses 5 years ago? And every single one will tell you yes. Like a 99.999% chance they're going to say, yeah, man, I wish I bought a gazillion houses 5 years ago. Now, you know what some of these same people are going to say 5 years from now? I wish I bought more real estate. That's what's going to happen. So as you're listening to this radio program, some of y'all have listened for a long time. It is time to get started. Because here's what I'll tell you. 5 years from now, you're going to wish that you started in real estate 5 years before. I want to thank Quest for having me out at the Quest Expo to speak at the event. It was absolutely fantastic. I want to thank all the guys and gals I got to hang out with this weekend. It was so much fun. This is sometimes I forget how fun this industry is. It was so much fun hanging out with everybody for the last week. Big thanks to Scott Carson. I got to hang out with his group for a couple of days. So, guys, tomorrow Tom will be on the show with Build Your Team Tuesday. Tom and I will be back Wednesday morning. And then I'll do the show on Friday. So thanks for listening, and we will see you guys tomorrow. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at Right Path Real